We have a gold system as well, which is an alternative private money. There now, the problem with the private money on gold is I think, I don't know what the U.S. holdings are, but I think 8 million tons or some of the huge number of gold there. So there's a lot of government control of gold.
Bitcoin, we believe, is a public good. This is financial superhighway. Everyone should have easy access to it and learn about it, because when they start with an ETF, they will learn more, and then they will want to do more in the way of self-custody and just get more involved into the community.
ARK Invest first became involved with Bitcoin in 2015. Although ARK's interest in Bitcoin began earlier, 2015 was the pivotal year when they could take real action, purchasing shares of Grayscale Bitcoin Trust, GBTC, a security they could include in their ETFs. ARK's founder, Cathie Wood, sought validation for the economic argument from Art Laffer, a renowned economist, after Chris Berniski wrote a white paper exploring whether Bitcoin could serve the 3 traditional roles of money and dove into the underlying technology. Laffer, after reviewing the paper, appraised and endorsed it. At that time, Bitcoin had a network value, or market cap, of just $6 billion. When Cathie Wood asked how big Bitcoin could get, Laffer suggested looking at the US monetary base, which was around $4.5 trillion at the time. That comparison fueled ARK's confidence in Bitcoin's growth potential. As a result, ARK bought GBTC, and despite restrictions initially allowing them to hold only up to 1%, they rode the appreciation, allowing it to grow to 10% of the portfolio at one point. Fast forward to 2024, Cathie Wood and Art Laffer appear in an interview with Preston Pysh at the Bitcoin Conference 2024 to discuss ARK's early beginnings and demonstrate their deep understanding of today's global monetary policy. Watch clips from the interview for further insights into Cathie's and Laffer's conversation with Preston Pysh. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
One of the things that, of course, President Trump is animated about is trade, and exactly the issue. So, and I know you do compare notes and everything. What is he doing? He must agree with you. He's a good businessman. Larry Fink's conversion was very important. That was a moment. Remember, he was denigrating Bitcoin for years. Very focused on the environmental side of it. But how is it perceived? Well, the first thing that happened was Grayscale, because it kept its fee at 2%, donated a lot of share to all of us, right? I mean,
why was that? That just doesn't make any sense.
Well,
why they kept it like that.
This way. We think it was a miscalculation, and the CEO, who I've known him for a very long time, he quit. I think, and now they're putting, if you look at what they did with Ether, they've introduced not only the conversion into the Grayscale trust into an Ethereum ETF, but also an Ether mini for 10% of it. So the cost there is 15 basis points. I think I don't know if they're keeping it at the rest at 2%. I don't know. I don't understand the strategy. But first donated a lot of share, grew the market in terms of, beyond what Grayscale offered. So the education of 11 ETF providers vying for business at the same time, the education around that was tremendous. And you had most of the major asset management institutions involved, whereas, when we were in our early days, they thought we were using a marketing gimmick, or there was, always a reason not to consider what we believed was a new asset class. So first, donation of share to lots of other players, all of whom have educated. But the most interesting thing is it really has not hit yet, because the big platform, we call them wirehouses. So Morgan Stanley, Wells Fargo, Bank of America, Merrill Lynch, LPL would be an independent one, UBS, none has approved them for the platform. And this is all deepening the liquidity of the market, which is that's a lot of what they're studying right now. How liquid is this market? Do we need derivatives? We'll wait for derivatives. I mean, they will use, I think when one goes though, the others will follow quickly. So I don't know if they'll wait another 6 to 9 months for derivatives. Maybe. I think someone will jump the gun before that, especially because it's become such a big campaign issue. And you've got, I mean, former President Trump, taking donations in crypto. Wow, that was surprising. But saying that he would guarantee the right to self-custody, very big in this community, right? Very, very, very big. Focusing on the miners and saying, yeah, America first. Yeah, we need them here. That's great. That was wonderful. And then, of course, what happened in Congress, the idea that the FIT 21, so Financial Innovation Technology of the 21st Century Act, FIT 21, got 76 or 78 Democratic votes in the House. Nobody expected that on Wall Street. Maybe that was becoming current wisdom, but that was big. That was big, I think, in terms of what I just said. The financial markets are waiting for cues to say, okay, it's okay to go. It's okay to go.
Cathie suggests that President Trump views trade deficits as a sign that the US is getting the short end of the deal in its trade relationships, particularly with countries like China. She believes Trump, being a businessman, likely sees this in transactional terms. The US is buying more from other countries than it's selling, so in his eyes it's losing money. The question of whether this approach actually benefits the economy is a big debate. Many economists argue that trade deficits aren't inherently bad, and are part of a more complex global trade network, where consumers benefit from cheaper goods and services. But Trump's focus is on balancing the scales and protecting American industries from what he sees as unfair competition abroad. Cathie highlights the significance of Larry Fink's shift in attitude towards Bitcoin, especially given his previous criticism of it, primarily due to environmental concerns. Fink's change of stance represents a pivotal moment for the cryptocurrency space, as his approval holds considerable weight in financial circles. Let's return to the interview to gain more insight from Cathie Wood.
If you guys haven't read the code book, or you can get one thing that's really important about money, and really important, is anonymity.
Exactly.
You need anonymity, period. And if you don't have it, it becomes an instrument of the government to go into your private life if they can trace you back. And anonymity is reasonable, easy, and trivial to solve. Read the code book here if you want to do it. I mean, I think I recommended it to you.
You didn't only recommend it to me. After our meeting, you sent me this copy.
Okay, I sent him the copy. You've got to understand the math, and you got to think of quantum security issues, encrypting, and all of that. But it is trivially easy using prime number series to be able to guarantee anonymity, where you and the other party have the code break, and there's no way it can ever be broken, period, done, all over. The winners now are the encoders, and you can do that with Bitcoin and make it happen.
Bitcoin, we believe, is a public good. This is financial superhighway. Everyone should have easy access to it and learn about it, because when they start with an ETF, they will learn more, and then they will want to do more in the way of self-custody and just get more involved into the community. Any fiduciary knows that if you introduce a new asset class into your asset allocation, the correlation of the returns associated with that asset class are going to be low relative to the other assets. So it's important to include it to increase returns per unit of risk. It's that low correlation that lowers the risk of the portfolio in general. So, I mean, that's how we've positioned what's going to happen near term. Longer term, I guess, we shall see. I think there are going to be share shifts in terms of this asset class, given the kind of appreciation we expect. We think its share of asset allocation will go up fairly significantly. And we did a study on that as well. using, minimizing volatility, maximizing Sharpe ratio, all the things that traditional financial asset allocators look at, you should start out with at least 2.5% to 5%. And that is how a new asset class starts. I remember in the 70s, when I was very new to the business, real estate was a new asset class for pension funds. Then in the 80s and 90s, emerging markets became a new asset class because MSCI had basically said, you don't have to take a risk on what this country or that country. Here, we're going to bundle these. So it became actually a new asset class. And here we are at the threshold of yet another new asset class, Bitcoin leading the charge. So I think the ramifications for Bitcoin are going to be quite significant, and it will take share, as will other crypto assets, I think, from traditional financial assets.
In an interview with the Wall Street Journal, Cathie Wood shared some eye-popping predictions about Bitcoin's future. She suggested that Bitcoin could potentially trade up to $650,000 per coin in what she calls her base case. But here's where it gets even more interesting. In an even more optimistic scenario, Bitcoin might reach between $1 million and $1.5 million per coin. Wood reflected on the skepticism Bitcoin faced last year, particularly after the dramatic collapses of FTX, Celsius, and Three Arrows. A lot of people were convinced that these failures were going to spell the end of Bitcoin, she said. But, in reality, the opposite happened. She went on to explain that more people are starting to understand the fundamental differences between Bitcoin and FTX. While FTX was a centralized entity with serious transparency issues, Bitcoin operates on a completely different principle. Bitcoin is decentralized, with a global network of developers continuously monitoring and safeguarding it from fraud. This decentralized nature is what sets Bitcoin apart and makes it resilient against issues like those seen with FTX. When FTX went down, the Bitcoin blockchain continued to operate seamlessly, Wood pointed out. The Ethereum network also functioned without a hitch. It was almost as if FTX's collapse had no impact on the blockchain systems. Wood also brought up the potential impact of a spot Bitcoin ETF on the cryptocurrency's value. She believes such an ETF could significantly drive up Bitcoin's price. The reason is straightforward. It would make it much easier for the average person to invest in Bitcoin. An ETF would offer a regulated and secure way to gain exposure to Bitcoin, which could be a big draw for many investors. According to Wood, it would simplify the process compared to using platforms like Coinbase, making it more accessible and less complicated for the everyday investor. As we come to a close, do you think we could really see Bitcoin hit $1 million? Or is this too optimistic? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.